The Biden administration just issued an executive order to restrict U.S. investment in China's high-tech sectors. It claimed the move is linked to national security, but at its core, it just wants to deter China's technological development. The ban would eventually result in the U.S. shooting themselves in the foot. Disturbing global supply chain will inevitably hurt the U.S. economy. The new rules will restrict U.S. private equity, venture capital, and joint venture investment in Chinese artificial intelligence, quantum computing, and semiconductors. The Chinese Ministry of Commerce said today that the U.S. action violates the principle of market economy. It will disrupt the stability of global production and supply chain, and China will reserve the right to take measures. Spokesperson for the Chinese embassy in Washington also responded that the curbs would seriously undermine the interest of both Chinese and American companies and investors. China will follow the situation closely and firmly safeguard its right and interest. The long-rolling ban has not only stirred outcry from China, but also countries around the world. South Korean politicians urged the U.S. to abandon its China chip strategy this week. It said the Washington intervention in the global semiconductor industry is clearly not welcome. Earlier, semiconductor manufacturer NVIDIA said restrictions on the export of AI chips to China will result in permanent losses for opportunity for U.S. industry. That's true. Why? Because the restriction only apply to U.S. Other countries will continue to cooperate with China. The U.S. economy will find themselves at a disadvantage. On top of that, the ban will unlikely to have a major impact on China because of the limited capital involved anyways. A recent article from the New York Times quoted Nicholas Lardy, a non-resident senior fellow at the Peterson Institution for International Economics. He said the U.S. only contributed to less than 5% of the Chinese inbound direct investment in 2021 and 2022. U.S. venture capital and private equity flows are not even a rounding error, he added, compared with the domestic investment in China. In the meantime, the move will inevitably make China more technological self-efficient. Despite restrictions from the U.S., China has been making strides in high-tech industries and share them with other countries. It looks like that the U.S. is not walking the talk in terms of strengthening cooperation. The current ban comes closely on the heels of the visit by its top officials to China with an eye on improving bilateral ties. In the era of globalization, technological cooperation is vital for every country. The U.S. move will only hinder global innovation and tend the economy, something that is not good for anyone.